Well, hello, Maverick traders. Welcome out to your market roundup for July 26th. Corey here with you. As always, a quick reminder to make sure that you follow your trading plan. We are now at the point where the market gets into the big events for this week. We're reporting earnings after the bell right now. I haven't had a chance. I'm recording this just after market close. I don't even know what's happening with Google and Microsoft, which are reporting right now, Apple and Amazon later this week on Thursday, and then, of course, the FOMC. So we are right in the heart of the event. So let's talk about markets here. A little bit of a give back today. So we rallied last week. We've given back some of that this week. You can see today kind of a bad day. S&P down 1%. Nasdaq got hit especially hard, down 2%. Oil prices down 2%, but interestingly enough, it was the energy space that was up the strongest early on. They gave back those gains, so kind of created this ugly candle. But energy's been on a nice run as a sector. I think the markets generally are just kind of getting choppy in here. Let's turn to the advanced decline line. You can see about, well, 2 out of every 3 stocks declining. And you can see the 50-period moving average about half or above, half or below. So we are truly in that sideways market. Today's events, well, let's talk about this week. Large cap tech reports, Google and Microsoft reporting today. Also, Nat Gas hit its highest levels since 2008. Now, think about how far we've come. Oil would need to go above 147 a barrel to be hitting new 2008 highs. So oil has lagged Nat Gas. Nat Gas is skyrocketing. We've talked about the energy situation in Europe is a real problem. They're talking about not having enough Nat Gas for the winter. I think companies that export, and this is going to be an ongoing story. So they're trying to do some things, kind of curb demand, slow usage, but it's a real story that has more to play out. As we look at the S&P, you can see we've now pulled back to the 50-period moving average. So we moved above. I don't like playing breakouts when you're just, coming above moving averages like this because you have all this overhead supply. I would much rather buy the dips than buy the breakouts. Time to play breakouts are when you're over here in a bull market. Bull markets don't have overhead supply. So as we look at this price action in the markets, we basically came up to that gap fill area and kind of hit our head there, and we're pulling back. This is that 390 area that we've talked about in SPY. We're kind of where we should be, right at that equilibrium. Kind of, this has been support, support, and then it became resistance, resistance. You can see how many times we hit this level, and it's had some importance. We kind of broke through. Now we're testing it to see if it'll hold. I think, again, we're just kind of in this range-bound market as we go into the Fed meeting tomorrow. Everybody's been antsy. Everybody's been anticipating this 75 basis point rate hike. It's coming. It might be a good thing for the markets to kind of get past that and actually have the Fed make that announcement. So the Nasdaq had gone up. Again, it had been a little bit stronger on the way up and a little bit weaker on the way down. And that's typical of the Nasdaq, where it's just a higher beta. It has bigger volatility swings. So again, we're kind of coming back to those short-term moving averages. I'd much rather, as a general rule, again, buy the dips because, if you're trying to play breakouts, you can get little 1 to 2 day breakouts, but they just don't seem to hold. They just don't seem to stick. Whereas if you're in a bull market, you can base and then break out and it'll just take off and it'll go for the next few weeks. Here, you're in a bear market. You have all of this overhead supply, all of these people that bought at higher prices. And as the market goes up, they say, thank you very much. I'll take my money out. And you just have a lot of selling pressure. This is all selling pressure, all dead bodies, people that bought at bad prices that want their money back, and it just makes it so it's a harder road. So the market has a lot of work to do. If you're expecting just some runaway bull market, I think you're going to be disappointed. Now, we may have established a bit of a low, and again, I think it's going to be kind of a choppy, we won't just stay flatlining, but it's going to be up and then down and then down and then up, and it'll be a little bit more of a fading of the reaction. So As you look at today, healthcare bounced back. Healthcare has been one of the strongest. I talked about this in the trading room. It still looks like one of the best sectors, even though it was a little disappointing last week in that you had a rotation. You had all the junk rally and all the things that were doing well underperform last week. But I would still give healthcare the benefit of the doubt. I still tend to like energy, even though it had kind of an ugly reversal today where it was up really strong in the morning and then gave all of that back. So you look at some of those candles, they're big red candles that had jumped up and then sold off. And what are we expecting out of earnings? Well, I'll tell you what the market expects. Look at the deep red in Amazon, Google, Microsoft. These are companies that have not reported yet, but it seems the market is anticipating some, some nervousness, some bad reports, some negative price action, and some selling leading into those events. So for the week and for the month, it's just kind of in that sideways range. It's kind of that zero ranking. We don't really have, if you said, are we in a strong uptrend? No. Are we in a strong downtrend? No. We're in more of a sideways range right now. Yeah, we've been gravitating up more than down in the short term, but we've been gravitating down more than up in the long term. So it's just kind of mixed signals. It's crisscrossing, sideways moving averages. And that's not really a trend environment. So you just want to wait your time, look for things that are moving a little bit better, maybe play a few more neutral strategies, things of that sort. As we look at the bullish side, so EQT, we talked about this one last week, and you didn't have to buy the breakout, but at least this is a true bull market. Whereas if you were to look at the market, the S&P and the Dow and the Nasdaq, they got a ton of overhead supply, huge downward trends. This doesn't have that. Look, it's breaking out, but you had a little group here that bought higher and, maybe a little bit over there. But basically, we're at the highest levels we've been at in years. So this is energy in general is something that could fly to the upside. It could in the coming weeks and months ahead really have some big upside moves. So I would give energy the benefit of the doubt, much closer to its highs, much stronger overall price action over the past year. In fact, the sector itself is still up year to date, somewhere in the neighborhood of 30-ish%, I want to say, 20 some odd percent. So, as a sector, it's just much better, closer to the highs. Largest Nat Gas player, I'd still love to buy it on a pullback here, but the point being, it's very strong and looks solid. LNG is in the liquefied natural gas. They ship natural gas. Now, this is a big sideways range, but what I see is something that is surging back up towards those highs currently. Again, I think I'd love to buy this on the dip more than just chase the momentum. But nevertheless, as you get little pullbacks, you'll probably create cups and handles and so forth. I would continue to look at that as a buying opportunity. And again, it broke out a few days ago and has been on a nice run. Something that is pulling back is Rivian. Now, this one is hampered by the overhead supply, right? All of this old higher price action. This one is something that's in a big long-term bear market. But interesting that we've got kind of this bearish to bullish reversal. This chart is actually similar to Ford. So if you want the lower beta, the slower moving stock, you could look at letter F. Very similar, where you've pushed above the moving averages and you're pulling back to it now. Rivian, as opposed to Ford, is high beta. So you're going to have more volatility here, which could be a good thing. Get some short-term spikes. I wouldn't overstay your welcome, but I think this thing can work its way back up and even make a little bit of a higher high here in the short term. A lot of these EV stocks that are not Tesla have been left for dead. And they were overvalued, they were overhyped, they had all these problems, right? And that's why they got punished immensely. Here, I think I'm, kind of looking at this as somewhat of a reversal. You had kind of a little mini cup and handle. You've kind of sunk, you broke out of that. You kind of sunk back in here using this support, and I think we work our way higher. So I'm kind of interested in Rivian for a trade. Intel, we mentioned this has been on the list as a neutral trade for the past couple of months, I want to say. And we mentioned last week it's probably time to remove this from the list. They do report earnings on Thursday. And I said last week it was up around 40. And I said if your center, if your sideways trade, if your ideal spots are around 39, 38, you probably want to wait. But as we kind of dip down there, take your profits. If you built your neutral trade around 40, you could have taken your profits last week. I don't know if we'll go any further, but I'm kind of wrapping this trade up in the sideways position. So we got that little pullback. The center line for the neutral trades down here around 38, 39. This is perfect. And I think you lock in profits and look for something else. In the trading room a couple of weeks ago, we talked about Amazon as a sideways trade. It kind of took off up and now it's come right back down, and it's right back at exactly the levels that we talked about it a couple of weeks ago for a sideways trade. So there again, Amazon reports on Thursday. I think we could take profits on that as well. Now, on the bearish list, so here's Berkshire Hathaway. For months, I want to say, we highlighted this one over and over again in the market roundup for bullish trades. All good things come to an end, and that's what happened here. It was up something like 20% while the market was falling apart. Since then, it has succumbed to the market's pressure and fallen down with it. And you're in a bearish pattern. You had a corrective phase. You're right up at the top end of this range, kind of filling the gap and such, and starting to roll over. So Berkshire Hathaway, purely technical, not really a fundamental trade or anything, but purely technical, looks like it wants to trade lower. You've got Mosaic. This is another one that we highlighted previously. I want to say we highlighted it somewhere in here when it had first broken the moving average and then spiked back up. That week, I think I highlighted Mosaic and Archer Daniels Midland. I traded both of those actually as bearish trades, but here I think we got another setup. It's kind of similar to Berkshire. You have this rally, this corrective phase. It's come up towards the upper end of the range. If you were to have Bollinger Bands on here, it's hitting that upper Bollinger Band. It's still below the 50 MA, kind of that Bollinger Band technique, but ultimately looks like it should trade lower in the coming weeks. And then last but not least, one that we had on last week, Schwab. We highlighted it up here as a bearish candidate. It's rolling over, and we talked about that you could get in this as kind of the big bounces followed by smaller bounces followed by eventually the breakdown, and that's exactly where we're headed. We're down a couple of points from where we highlighted it last week, meaning we highlighted it as a bearish trade. It's moving the right way. It's going down a couple of points so far, and I think it has a bit more to go. So I would anticipate, somewhere in the neighborhood of 55, 56 per share, which is a pretty good move on a percentage basis. Another 10% or so down in that stock looks likely. So markets are somewhat in a trading range, but there's still going to be things that are in a better uptrend, things that are in a better downtrend. But you kind of want to think about just the markets as when the market's gone on kind of a sustained move up. Let's say it's run up for a week or two. Then you want to start to kind of take off some of those trades. And when it's sustained a move to the downside for a week or so, you probably want to take profits on those bearish trades and start to, that's kind of how I'm looking at it is, if you're in a trading range, it doesn't mean that every candle will line up sideways. That would be nice, but that's not reality. A sideways pattern is usually much more like this, where, you're rallying for a few days and then you kind of fade off for a few days and you come back and it's not even that clean. You can kind of have fake out moves, fake out breakouts and things like that. And I think there'll be a lot of those sort of fake outs. I wouldn't really trust a lot of breakout and breakdowns in the S&P or the Nasdaq or things like that. I mean, I think it was a good fade to fade that break above the 50-day where the S&P and the Nasdaq rallied for a couple of days and it looked like, hey, we're in good shape. About the time that everyone says, well, the markets look much better, it's where you want to sell. in a sideways range, right? So we're going to fade the sentiment. We're going to fade the price action a bit for a little while, I think. I think that's the way to do it. FOMC meeting tomorrow, advanced GDP on Thursday. GDP numbers have been negative in the prior quarter. I did see that the White House came out trying to clarify what they believe is a recession, which kind of tells you they think more GDP negative numbers are coming, and they don't want the markets to call it a recession or to get too fearful just as of yet. So there is much debate about what constitutes an economic recession, and the White House is saying, hey, we're not in a recession. Here's the definition of it and so forth. Apple and Amazon on Thursday, as I said, right now we have Google and Microsoft, but there's many others. Boeing and Chevron and Exxon both report on Friday. Meta, we didn't even talk about Facebook and Qualcomm. So plenty to keep you busy on the earnings side as well. Thanks again, everyone, for being here. Have a great rest of your week, and we will see you next time. Goodbye, everyone.